International Financial Reporting Standard 15 Revenue from Contracts with Customers. Objective 1. The objective of this standard is to establish the principles that an entity shall apply to report useful information to users of financial statements about the nature, amount, timing and uncertainty of revenue and cash flows arising from a contract with a customer. Meeting the objective 2. To meet the objective in paragraph 1. The core principle of this standard is that an entity shall recognize revenue to depict the transfer of promised goods or services to customers in an amount that reflects the consideration to which the entity expects to be entitled in exchange for those goods or services. 3. An entity shall consider the terms of the contract and all relevant facts and circumstances when applying this standard. An entity shall apply this standard, including the use of any practical expedients, consistently to contracts with similar characteristics and in similar circumstances. 4. This standard specifies the accounting for an individual contract with a customer. However, as a practical expedient, an entity may apply this standard to a portfolio of contracts, or performance obligations, with similar characteristics if the entity reasonably expects that the effects on the financial statements of applying this standard to the portfolio would not differ materially from applying this standard to the individual contracts, or performance obligations, within that portfolio. When accounting for a portfolio, an entity shall use estimates and assumptions that reflect the size and composition of the portfolio. Scope 5. An entity shall apply this standard to all contracts with customers, except the following: a. Lease contracts within the scope of IFRS 16 leases. B. Insurance contracts within the scope of IFRS 4 insurance contracts. C. Financial instruments and other contractual rights or obligations within the scope of IFRS 9 financial instruments. IFRS 10 Consolidated Financial Statements, IFRS 11 Joint Arrangements, IAS 27 Separate Financial Statements and IAS 28 Investments in Associates and Joint Ventures. And D. Non-monetary exchanges between entities in the same line of business to facilitate sales to customers or potential customers. For example, this standard would not apply to a contract between two oil companies that agree to an exchange of oil to fulfill demand from their customers in different specified locations on a timely basis. 6. An entity shall apply this standard to a contract, other than a contract listed in paragraph 5, only if the counterparty to the contract is a customer. A customer is a party that has contracted with an entity to obtain goods or services that are an output of the entity's ordinary activities in exchange for consideration. A counterparty to the contract would not be a customer if, for example, the counterparty has contracted with the entity to participate in an activity or process in which the parties to the contract share in the risks and benefits that result from the activity or process, such as developing an asset in a collaboration arrangement, rather than to obtain the output of the entity's ordinary activities. 7. A contract with a customer may be partially within the scope of this standard and partially within the scope of other standards listed in paragraph 5. A. If the other standards specify how to separate and/or initially measure one or more parts of the contract, then an entity shall first apply the separation and/or measurement requirements in those standards. An entity shall exclude from the transaction price the amount of the part, or parts, of the contract that are initially measured in accordance with other standards and shall apply paragraphs 73 to 86 to allocate the amount of the transaction price that remains, if any, to each performance obligation within the scope of this standard and to any other parts of the contract identified by paragraph 7b. B. If the other standards do not specify how to separate and/or initially measure one or more parts of the contract, then the entity shall apply this standard to separate and/or initially measure the part, or parts, of the contract. 8. This standard specifies the accounting for the incremental costs of obtaining a contract with a customer and for the costs incurred to fulfill a contract with a customer if those costs are not within the scope of another standard. See paragraphs 91 to 104. An entity shall apply those paragraphs only to the costs incurred that relate to a contract with a customer, or part of that contract, that is within the scope of this standard.